Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Meta reported earnings last week, and there was a lot that investors liked. In particular, they liked that the company's back to growth, at least a little bit over a year ago. And there's more focus on investments in things like artificial intelligence and things that may pay off more in the future. But there's one thing that doesn't seem to be getting a lot of attention this quarter that was getting a lot of attention 3 and 6 months ago, and that's the metaverse. And Meta, the company actually changed its name to Meta Platforms. So I think we should be focusing a little bit more on how that side of the business is doing, what the investment is costing investors, and what signs there are that there's actually momentum. So that's what I want to dig into today. My name is Travis Holm. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content and turn on those notifications so you know when a new video comes out. Let's turn here to one of the slides from earnings. Now, this is the segment results for Meta. So you can see that advertising rebounded slightly last quarter, 28.1 billion versus 27.0 billion a year ago. That was exactly what investors wanted to see. Obviously down from the holiday quarter, but that's not really all that big of a deal. And the family of apps continues to be extremely profitable, $11.2 billion in operating income. But what I want to focus on here is Reality Labs. Reality Labs is the segment of the business that Mark Zuckerberg has really bet the company's future on, with virtual reality specifically, but also augmented reality and the metaverse concept that they renamed the company for. You can see here Reality Labs revenue for each quarter since Q1 2021. $534 million, up a little bit in 2022 to $695 million. Last quarter, just $339 million. Why is that important? Meta came out with its professional model of a VR headset that should have drummed up an increase in sales, and it simply didn't do that. Even a price reduction didn't help the company's top line. And what did that mean for operating expenses? Well, you can see that 2 years ago, $1.8 billion spent in operating the Reality Labs. Last year, $3 billion. This year, $4 billion in a single quarter. So a $16 billion operating loss run rate for Reality Labs. What is this doing to costs as a percentage of revenue? You can see here that expenses as a percentage of revenue are rising over time. Some of that is due to a sharp increase in R&D. That would be a lot of that Reality Labs spending, 28% to 33%, up from 20% 2 years ago. So more than a 50% increase in R&D spending. General and administrative also up from 6% to 10%. Meanwhile, things like sales and marketing and cost of revenue are not climbing at all. The reason I think we should be talking about this is Meta is now a $620 billion company, trades for a price to earnings multiple of 31. So that's relatively expensive for a company that's not growing its core operations very much at all, and its expenses are actually rising. We also know that Meta is focusing on efficiency. If it's focusing on efficiency in its core business, maybe it should be focusing on efficiency for its business overall. And the biggest line item that it could actually eliminate is Reality Labs. That would open up $15 to $20 billion of operating income that could be used to reinvest in the core business, or better yet, do things like buy back stock or pay a dividend. I think it's fascinating that this isn't getting more attention from the market right now. And I think the reason is because Mark Zuckerberg has convinced investors that this efficiency that they're implementing in the core business is really going to help Facebook and the other apps monetize a little bit better, and that will give him time to invest in Reality Labs. But I just don't see any evidence right now that massive investment is going to be worth it for Meta, the company, or shareholders long term. The fact that revenue is not growing in the VR space right now and operating losses are increasing should be shocking to investors. Even if there's a small pullback in investment in the metaverse, there's still a massive amount of money being spent. I would argue that it's time for Meta and Facebook to maybe make investments in other companies who are building metaverse, VR, AR technology, rather than doing it under its own umbrella. I think we've seen enough evidence that this is not an investment that's going to pay off in the way that Mark Zuckerberg hoped it would. And that's just the reality of the business. Sometimes it's okay to move on. But what do you think about Meta stock right now, and specifically the investment in Reality Labs? I'd love to hear your comments in the comments section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. I'll see you here next time.